Hello everyone, today we'll talk about Bitcoin, which has already risen above $76,000. It reached the target level that we pointed out in the previous video. That's this green level at $76,470. And we'll figure out what to expect next. Before we start, I'll remind you that I do all reviews, analytics, and my trading on the Quant Fury platform. Here you pay absolutely no commissions and can trade any financial instruments. Join the team via the QR code or the link in the description. Now let's take a look. Bitcoin traded for a long time below the $72,078 level, this white one here, which was marked back in 2024. It made 3 attempts to break through this level, right here and right here. And finally, right here, this attempt succeeded. And when it succeeded, we identified the growth target. But we have a trend line built on the highs of October 2025 and mid-January 2026. Note that the price reached this trend line and didn't break it, though it broke the 76,470 level. And over the weekend, it showed a bearish engulfing of Friday's growth candle, meaning the trend formally turned down. Yes, we might see an engulfing of Sunday's candle, but if we do, then we'll talk about the trend turning up again. But right now, it's looking down, and the target for this decline is that same $72,078 level. On one hand, it's support. On the other, it's the upper boundary of the range. The 50-day average is also pointing here. It's green on the chart. And if this level doesn't hold us, then we'll go to test the February low below $60,000. If it holds, there's a chance to go here, toward $84,000, where the 200-day moving average is. Here it is in orange. It's currently higher, but it's declining. Now let's clear all the markings and look at the monthly candles. On the monthly candles, I told you about a possible growth scenario. So even if we rise to the base of the February candle, around $78,000 or $79,000, that's not growth yet. Formally, growth would be engulfing February's downward candle, meaning we must see a monthly close above $78,742. Only then can we talk about a reversal on the monthly candles. Right now, we can interpret this growth as nothing more than a correction before a further decline toward the 50-month average, around $58,000 to $59,000, and potentially the 100-month one, because as you see, we broke the 50-month average in 23 and could head to the 100-month level around $40,000 to $39,000. Let's look at the weekly candles. On the weekly candles, the situation doesn't exactly point toward a decline. It points toward growth. Why? Well, first of all, our RSI has bounced off the oversold zone and is looking up. Secondly, last week we got the highest close within this sideways range. That is, we closed higher than the week of March 9th. Even if I move the cursor, you can see that last week closed just a bit higher. Let me stretch the chart, it'll be clearer that way. There, you can see it. And so, by formal signs, our growth target is the 100-week moving average around $87,500, or maybe even the 50-week one near these highs, which is around $94,000. Yes, it is declining. So by the time we reach it, if we consider such a scenario, it might be somewhere around 94,000. But the daily candles suggest that making purchases now is extremely dangerous and undesirable. Therefore, I recommend waiting for the weekly close, a test of the $72,000 level, and then make your decision. Well, maybe we'll make it together in the next reviews. Now let's switch to my indicators on TradingView. Before you are the charts for the S&P 500 index. These are E-mini futures from the Chicago Mercantile Exchange. You can also trade them on the Quant Fury platform and also without any commissions. And we're looking at the very bottom indicator under each chart. It's the red curved line. If it's in the extreme upper position, that's very strong overbought, and if it's in the extreme lower position, then it's strong oversold. And on the center chart at the bottom, notice right here we have 12-hour candles and very strong overbought conditions, and for a long time now, there's already some local downside target around 6,900 points, 6,800 points. This suggests that in the stock market for the key US index, we have a chance to move into this area. On the 4-hour chart, there are a bunch of missed downside targets, and I've highlighted them with red arrows. And this index has a quirk where it often ignores downside targets for a long time and then hits them all at once in a single move. And finally, let's look at the daily candles. Here too, there's very strong overbought, which means we have every chance to go, well, at least somewhere toward the 100-day average or the 50-day average. And finally, the monthly candles. Here, the overbought oversold indicator shows negative momentum. It says that the market as a whole, despite the index value rising, is trending downward, and we have a near-term downside target right here. That's around 6,100 points, 5,800 points. Yeah, well, maybe 5,900. And all of this together points to serious risks of a decline in the stock market. And just imagine if we go from the current 7,150 to 6,900, which is exactly the 100-day average. What will happen in that case to Bitcoin and the crypto market as risky financial instruments? Therefore, I recommend refraining from any purchases or investments in both the stock market, specifically the S&P 500 index, and in Bitcoin. I also recommend considering the Quant Fury platform for your trading. And I'll say goodbye until the next reviews. Subscribe to the channel. See you next time.